This is a video in which I'm going to talk about fundamentals in trading. And fundamentals are when we use economics and world events or even some financial numbers of things which are not things in the charts and which do not involve technical analysis, for us to be able to see how on a long-term basis a certain instrument may be inclined to perform better. Fundamentals also now help us to avoid trading when there may be market conditions which may be risky for us to trade. One of the main websites you can use to check for some of the fundamental news is forexfactory.com. So you will use that one when trading currencies and also even for other financial instruments, asset classes like your stocks and also even bonds and also even the metals like gold and all other asset classes, because there you can see events of the Fed chair speeches and also even of NFP and also even for CPI news releases. These are news events which affect the market, and it will be dangerous for you to trade at the times of those news releases. Okay, so for those who are still new in trading, this is the website of forexfactory.com, and whenever you use it, you can then have to confirm and see if it's using New York time or your local time. And remember that your fundamentals are only used when trading financial instruments. They are not used when trading synthetic indices from derivative, like the volatility indices, the boom and crash indices. They don't have fundamentals. Those are only traded with technical analysis and are not affected by world events. So you can actually see here it's 10:29 p.m. So this is 10:33. It's almost the same time. So for you to move to New York, USA time, you select there on that icon of the factory, and then you select where the time is. And once you have logged in your email account, it can save for you to always be using the same time zone that you prefer. So I'm now going to select them, and then I'll look for or scroll up to where it's GMT minus. It will be -5 for these days because we are now 7 hours ahead of New York time, and GMT now is now 5 hours ahead of New York USA time when we are in the November to March months. But it did been in March to November months, we will be using GMT -4, where USA will be 4 hours behind GMT time or 6 hours behind Zimbabwean time. Remember that Zimbabwean time is 2 hours ahead of GMT time. So that's why I've selected Then I'm now selecting Save Settings. So the main events that you have to watch out for are the red folder events, but not all of them are very impactful. And I'm selecting to more so those of this week can be seen. But the ones which are very impactful, which affect markets, are the CPI news releases, the red folder events of them, okay, like this one. And then also the FOMC, the red folder events, and then also the Fed chair speeches. Those like employment claims don't really affect the markets, even though they are red folders. And then also the bank holidays. The bank holidays will have a gray folder, and they will actually be written on the notes that it will be all day, meaning that you will not trade an instrument if its country has a bank holiday, be it its currency or an index, a stock index, which tracks stocks of that country. And this applies for all financial instruments, the FOMC, the NFP, and the CPI, and the Fed chair speeches. If they have red folders, you will not trade at those times for all financial instruments. Even like maybe even about 5 to 10 minutes before, up until about 30 minutes after the event, maybe just up until an hour after the event, for you to be safe. You shouldn't take any trades. And it's also dangerous for you to have open trades by then, because on your chart on MetaTrader, price can just have very big candles, and if you're unlucky, they can happen opposing the direction of your trade, and price can now target your stop loss. Price can then at those times have very big candles, which can be against your favored direction. You do not know whether they will occur within your direction or against your direction. And sometimes those price movements can happen on within seconds of those type of red folder events. They can sometimes have candles that big, even down on the lower time frames, like even the 5-minute time frame, which will now be more enlarged then, and it will even seem as if it can be a bigger distance. Then for the non-farm payroll event, it usually happens on the first Friday of each the week, which will have the first Friday of each month. That week will have the non-farm payroll news releases on the Friday, usually around 8:30. And that week, the whole week, will usually have less performance compared to other weeks in your trading. So I actually do not trade that week. Although if you do want to trade on that week, you can trade maybe the Monday and Tuesday, and up until before the Wednesday on at the morning session. Then from the afternoon session from Wednesday onwards up until Friday, the week will have even worse performance for your trading. But generally the whole week will be iffy and the performance will be slightly less compared to the other weeks. I actually do not trade that week, which will have the first Friday of every month. And then you should also know that Forex Factory is also known for being bribed with market makers to change the colors of the folders. So for you to be safer, you can mix the readings from forexfactory.com with that of another website of investing.com, which also shows news events for Forex, and also they also even can also apply to stocks and even stock indices. Then you will move to this section with the economic calendar. But once you had opened it before and it saves it in your cookies, it will now always be opening on the page with the economic calendar. So comparing the events from this side and also forexfactory.com will help you have more accurate notifications of the high impact news events. So for investing.com, they do not have colors for folders where you look for red folders like in forexfactory.com website. But here they will have a number of those bull signs. So those with the 2 signs will be medium impact. Those with 1 sign will be low impact. Then the high impact news events will have 3 of the bulls. So you can select for tomorrow or even for the whole week for you to scroll then to see the news events in advance. And you can also even select your time zone if you want to change it. So the high impact news event, sometimes you may see a few times where there will be a high impact news event here on investing.com as a high impact event with 3 bulls, but on forexfactory.com it will be listed as a medium impact event with an orange folder. So for me then, I'll just consider that event as a high impact event if any one of the 2 websites list it as a high impact news event. And remember that it's not all types of high impact news events which actually change price that much, but the CPI are the ones you consider, and the Fed chair speeches, and the FOMC, and also the NFP. And then for stocks, there's another website which is mainly specific for stocks. If you are someone who trades stocks, which shows news events which are more catered for the stock markets. If you trade stocks, called Finviz. Okay, so this website also uses red color for the high impact events, and then orange color for the medium impact events, then yellow for the low impact events. And then for people who trade stocks, Finviz website also has an advantage because it shows events of what are called earnings reports. So earnings are when stocks are 4 times in a year on each quarter announced the performance and the profits that a company would have produced. And you do not have to really know or care about how much profits or losses the company would have produced, but to just know that when the events are done, price may have very fast movements, which may be risky because sometimes they may have gaps where price actually jumps and might move against your favored direction, even beyond your stop loss. And on the website of Finviz, you do not have to be considered with all the types of news events that they have, because we use trading methods which are very powerful of institutional forms of trading, and where we seek liquidity of retail trading concepts used by most retail traders of trading methods which are not profitable. So you don't have to use some of the fundamentals which all other traders out there use, because some of them are not even effective. They actually do not really show how price may move. Only use the ones which I will teach you. Our trading methods are already strong enough to not be affected by some of the fundamentals which are taught by other people if you were to research on the internet. And then also another fundamental which affects mainly for currencies, which you use for currencies, are interest rates. So interest rates, the source that you can use for them, one of them can be globalinterestrates.com, although they are public and can be found even on other websites. And you will use them when trading currencies. So currencies, remember, are traded in currency pairs, where you trade one currency for another. And the higher that the interest rate a country and its currency is the more likely it gives a likelihood for price to increase in value. And if another currency has a lower interest rate compared to that of another country, there are chances that are that currency will be able to have a more downward selling effect on the fundamental level of very high time frames, like even on the weekly time frames. So trading in the same directions of interest rates for currencies will improve your trade performance. So this is the website that you can use, which is more reliable interest rates. So let's say, for example, okay, the American bank, this is the interest rate 4.75% for the US dollar. So since it has 4.75% for its interest rate, and then if you can see the Australian Central Bank below it has a lower interest rate of 4.35%. This means that if you were to trade the Australian US dollar currency pair, which would be AUD versus USD, since the US dollar has a bigger interest rate, you should be focusing on taking sell trades, because the Australian dollar has a lower interest rate. So on the weekly time frame, it will have a stronger downward momentum, whilst the US dollar has a bigger interest rate and will have a more upward force on the higher time frames. So you will have better performance if your trades will now be focusing on selling the Australian dollar versus US dollar currency pair. And you should trade all your forex or currency trades using the interest rate concept. And then another example for the European Central Bank, you can see it's 3.4%. So if you were to trade the euro versus US dollar currency pair, okay, since the euro has a smaller interest rate than of the US dollar, okay, you would also focusing on selling the euro versus US dollar currency pair because the interest rate is 3.4%, whilst that of the US dollar was 4.75. So the US dollar on the weekly time frame will have a strong upward momentum, whilst the euro will have a stronger downward momentum. So you would only focus on trading, sell trades for the euro versus US dollar pair up until the interest rates will change. Sometimes they can change after about 3 to 6 months or even a year. And you only use them for currencies when trading the asset class for currencies for forex. And all your trades for forex for currencies should consider interest rates. Then stock splits or stock reverse splits are only for stocks, not even stock indices, but just stocks. Remember, your stocks, these are like Coca-Cola, companies like Facebook, even Amazon's. Okay, so when stock splits occur, companies, if a stock split will occur, they will want to reduce the amount of price per each share and increase the number of shares of the company. So if it would be a stock, price could maybe drop sharply in an instant from a certain price down to a certain price on a high time frame, like maybe even the daily time frame in an instant. But lucky enough, companies do announce in advance when they will do stock splits. So you should not trade when there will be a stock split which will be about to happen. You can always check on websites which usually show news of stocks, even maybe sometimes even Finviz website could also even show that. And also the websites, sometimes you even see it in the news. Okay, so I think Nvidia had a stock split there. It had a stock split this year, but this one, because price jumped up, it would now be a reverse stock split. Reverse stock split is now when price is now just jumping up in an instant because the company will increase the price of their shares and reduce the number of shares available to people who buy the company's shares. But even though if you don't remember the term stock splits or reverse stock splits and exactly how they work, just remember not to trade when they will happen. And you can always see the news on certain websites which show news of stocks like Finviz, or even sometimes even on other news events like even maybe on Yahoo Finance. They can also even show those things. Then when day trading stocks also do not trade what are called low float stocks. These are stocks which will have a total number of shares which are less than 10 to 20 million shares. And the problem with trading them is that there will be a smaller number of shares, and this can cause high volatility, which may cause dramatic price movements, which can sharply increase or decrease in price. And you won't know if it will sharply go against your direction of favor. And the problem of them having low volume like that is that if you open a trade and are trading on ECN or STP markets, which connect you to more real markets, you may have problems sometimes closing your trades if you are trading large amounts of money, in case if there won't be people who are willing to take counterparty of your trade. Because if you buy a stock and you want to close your trade, you shall have to sell it to someone so you can close your trade. So if there won't be institutions available to buy it from you for you to sell the stock from them, you might not be able to sell all of it, or might end up selling the rest at less favorable prices, which could now end up reducing your profits. So for you to know the total number of shares of a stock, you can always Google search that on the internet. It's always public knowledge. Okay, so you can even search Apple stock volume, and then popular websites with credible information you can use. Finance Yahoo, for example, that one. Even also the NASDAQ website, even also the Market Watch. These are also popular websites which are usually up to date. Even also barchart.com, even also CNBC is okay, and even investing.com. So here I selected finance.yahoo or Yahoo Finance, and sometimes they can show the total number of shares traded as a 3-month average, updated every 3 months. You won't consider this price of a single share, but you will come and look at the volume, especially the average volume. So as long as it's above 10 or 20 million, especially above 20 million, those are stocks which you should trade. Those with less than 20 million shares or less than 10 million shares especially can end up having low volume, and your trading might have more risk. And then also remember that is only in stocks, where you are trading companies like Google, even companies like Microsoft and other such companies which will have shares. So you can always, if you're a beginner, you can watch the video of asset classes where I teach of different asset classes, how they are different, the stocks, the forex, currencies, and also indices and cryptocurrencies and others. And then also when trading stocks, also do not trade what are called low volume stocks. Okay, low volume stocks are those which are considered to have an average day trading volume of about 1,000 shares per day or less, which are traded each day. Trading them also has a problem because they will have less liquidity. Liquidity means the ease of you being able to open your trade or close your trade. How easy it is to buy or sell your stocks. So if the stocks has an average day trading volume of less than 1,000 shares, also do not trade those stocks. And you can always research that on the internet for average day trading volume of any stocks. It's public knowledge which you can always find. Then in fundamental analysis, you should also know that some certain world events like wars, pandemics, and black swan events also affect trading. Wars like even the Russia-Ukraine war was also increasing a little bit of risk in trading and reducing performance a little bit compared to other years. And even if other countries, popular countries like USA, if they were to have a war, that would also really affect the markets to the point where you actually should not trade, especially if there will be a World War III involving powerful countries. And also even pandemics, like when we had the COVID pandemic, the markets also were affected to the point where you actually were not supposed to trade. So any worldwide pandemic which will affect a lot of countries is a time also you also will not want to be trading. Then black swan events are like when there can be depegging of currencies. Like if a country which would have pegged its currency to the US dollar, if it removes it from the value of the US dollar, that could change the exchange rate of the currency overnight with a very big value, okay, which can be hundreds of maybe even thousands of pips. And that can affect your trade because either your trade could have a very huge win or a very huge loss to the point where you can blow your account and lose all the money in your account. So one such black swan event was when we had the depegging of the Swiss franc, which actually caused some brokers to end up even going broke because they were not able to even protect themselves. Okay, so this is one such case of the depegging of the Swiss franc, the currency of Switzerland, in 2015. And when price drops even with 20%, that's a big percentage because we trade with leverage in trading. That can be a very big number of pips. And we might have black swan events within the next few years. So it's actually wise for you not to have all the amount of money that you want to trade any financial instrument, to have all of it in your MetaTrader 5 account. You can have most of the money in your back office account of your broker and then only deposit money in the MetaTrader account, which can be your money which can afford your margin costs, and which is the stop loss of the trade. And also try to also make sure that it's not more than 25% of your portfolio of all the money in your brokerage account. So besides depegging of currencies, there are also other black swan events which rarely occur, but you should not worry a lot because they happen maybe once after every many years, sometimes about 10 years or anything. Some of them can also be stock market crashes. But because of the world events happening these days, we might actually have more black swan events which may occur. So when trading financial instruments, only have a maximum of about 25% of your whole portfolio in your MetaTrader 5 account. Because when a black swan event occurs, your stop loss will not be respected. Price can go in a loss in such an instant to the point where you can even blow your account and lose all the amount of money in the MetaTrader 5 account, but not that which is in the back office in your main broker account. Then on fundamentals, you also have to consider public holidays of the country with the instrument that you are trading. So this affects even all asset classes for financial instruments. Same applies for wars, pandemics, and black swan events. They also affect all financial instruments, be it cryptocurrencies, stocks, which are like your Google, your Microsoft, and even also Forex for the currencies. So for public holidays, the currency that is on any currency pair, if it has a public holiday, do not trade on that day. And also do not trade the morning after the public holiday. And it's morning New York time. The markets also won't move that well on the morning after a public holiday. And you can always Google search to see the public holidays of any country. They are always public knowledge. And now, when it comes to Easter public holidays, you should know that some countries use different dates for the Easter public holiday. So you should also then check to see when the country has its Easter holidays. And you should also know that for the Easter holidays, it actually affects the market to a greater extent, that you should also not trade the week which will have the Easter Monday day. That week is a week which you should not trade. And then for the Friday, the Good Friday, the Easter Friday, you just avoid trading the Friday and the day, maybe the day also before Easter Friday, which will be the Thursday. Also do not trade that day. And then for public holidays, you should also know that other countries may also respect the Thanksgiving holiday in USA, for USA. So you might also have to include that Thanksgiving day for all financial instruments. USA public holidays will affect all financial instruments. Okay, even if the stock is from a country not in USA, or even if the currency is from a country which is not in USA, you always have to save these USA public holidays even on your Google Calendar, and make sure that you can even put the notifications a day before, so that you even remember of that before the actual day of trading. And to also remember not to trade the morning after the public holiday. And remember, it's morning in US New York time, not morning of Zimbabwean time. And then also for public holidays, you should know that we don't usually consider public holidays for synthetic indices, but derive on USA public holidays, it may change leverage of trades and also commissions of trades. So also don't trade synthetic indices only on public holidays of USA. They actually will send you an email a day before or a few days before telling you that trading costs will change, and I suspect that there could also be some smaller manipulations because they would have already given a warning that they could change leverage. So you now want to know if Deriv will change the leverage in your favor or against your favor, or even the trading costs. So it's just best also not to trade synthetic indices on USA public holidays. But on the next day, you could even trade the morning after the public holiday only for synthetic indices because they would then return trading costs to the normal. Then for elections, also don't trade maybe a week before to a week after presidential elections of a country of the instrument that you are trading, be it if it's a stock of a certain country, like maybe even Coinbase company or Porsche company for cars. And then for elections of USA, you should note that they are more impactful compared to elections than of any other country. To the point that when there are USA elections, all markets of financial instruments will be affected. So maybe a week before to a week after USA elections, presidential elections, you shouldn't trade all financial instruments in all asset classes, even in cryptocurrencies, even bonds and commodities. Then if it's for the specific country, which is not USA, maybe on the presidential elections, you can also just avoid trading the same week with the presidential elections since they are less impactful than those of USA country. Then if there are mid-term elections, maybe for USA mid-term elections, which happen after about 2 years after the presidential elections, you might also want to avoid trading any financial instrument the week that there will be mid-term elections. And then for other countries, since their elections are less impactful, if you are trading a stock or a currency from that certain country, maybe you can just avoid trading a day before to a day after the midterm elections and also the day of the midterm elections. Then the other thing you can notice are quarterly earnings reports. But I already mentioned that when we went to the Finviz website. These will be useful in trading stocks. So remember I was saying that quarterly earnings report happen 4 times a year. And it's just when companies are announcing their profits or losses that they would have made each quarter, which is every 3 months. So the Finviz website will actually show dates when there will be earnings report. And because they are public knowledge, you can also even see them being announced, the dates that they shall happen, even on other websites which show news of stocks, even besides Finviz. Even also maybe in other news websites, you may also see them even being announced even before they will happen. So those are the main fundamentals which you will consider when trading financial instruments. And then for synthetic indices, the only one which you may consider is to not trade on public holiday days of USA country, because derivative will change commissions and leverage and payouts, and we are not sure if they will change it in your favor or not. And the problem is that they do not specify exactly how they will change them. So that's why I don't really trust trading the synthetics those days. But remember, for forexfactory.com you watch, and for investing.com, you watch out for red folders, or if event with 3 bulls for investing.com, for events of CPI, FOMC, NFP, and Fed chair speeches. And remember that the NFP news release is the week which will have the first Friday of each month usually. But on rare occasions where it's not that week, you can always research on the internet to see if it will be a different week. But nearly all times it will be the week with the first Friday of each month. And those 4 events, they affect all financial instrument asset classes. And then for FinViz, it's only news related to stocks, and they don't affect stock indices unless if it will be the CPI, FOMC, or Fed chair speeches. But the earnings reports, quarterly earnings report, they won't affect your stock indices like US 30 or US 500, which are indices which show the average performance of stocks. Then interest rates, that's just for forex, for currencies, where if a currency has a bigger interest rate than another currency, it's more inclined to move higher than the other currency, and vice versa if the interest rate will be lower on very high time frames like the weekly time frames. Then you also won't trade when there are stock splits or reverse stock splits, and they will be announced in advance. And you also won't trade low float stocks or low volume stocks defined by those 2 definitions there. And you can always find them on the internet. There are many websites which can show those stocks, even the actual companies' websites. So if you have any other questions on fundamentals in trading, you can just ask me. And remember not to consider some of the fundamentals which other people on internet use, because we use a powerful trading method, and for day trading, markets are more algorithmic, meaning that they are controlled by algorithms. So you do not have to trouble yourself with some of the other concepts for fundamentals which you will see other people using. They actually think that price moves with supply and demand and is affected by many types of fundamentals, but it's actually false. And one of the reasons why most traders lose money, because of being taught the wrong information.